Chinese tech stocks like Alibaba are crashing hard right now. And the question is it worth buying them? Yes or no? We will be analyzing all of this in this video. Stay tuned. My name is Hamann from H2 Intel, helping you succeed with investing. There has been a little bit of chatter in the investing community regarding the crash in Chinese tech stocks like Alibaba or also Tencent. And this caught my interest, of course. And then I start digging in a little bit deeper and try to understand, okay, is there an opportunity here or is it just noise and I should stay away? Please note that none of this is financial advice. This is only for educational and entertainment purposes only. And I will just let you know what I think. Let us just look at one concrete example. For example, Alibaba stock, a Chinese tech stock, and what is happening there price-wise. What about the fundamentals? What is the company doing? And I will just show you how I do a quick analysis on this. Nothing too deep, but let's see if we can identify opportunity or not. So as we can see here, this is Alibaba. The stock traded on the New York Stock Exchange here. The ticker is BABA. And we see here the monthly chart, and let's just find out what is happening here. So basically somewhere here in 2014, they did an IPO, Alibaba. And I think the initial IPO price was something around 68. This is not here in this chart, but still somewhere around this. Then it peaked around 100, crashed down, and then had a big run up to 300. And as we can see now, this stock is crashing very fast. So this is a quite quick drawdown and also a very deep drawdown. Now let's measure what has been the historical drawdown for Alibaba stock. We can do this like this. So basically you can see here this crash was 52%, just to get a little bit of feel what is happening. This was 38%, and this here was now 76%. So this is quite dramatic and in a very short period of time. So if we look at this, basically the top was here on 1st of October 2020. So in a very short period of time, a quick crash, and the question is why? And also, is this a time to buy? Is Alibaba an interesting high quality stock? Yes or no? Just from the charts here, we can see that basically if we try to identify some support level, it would be probably somewhere around here. Obviously, you can draw it a little bit higher, a little bit lower. It does not matter. But obviously here the big move started. And we see that this has been resistance and support over and over again. And we see also here in the price action, like this move here, a very quick sharp drop, especially in this month. This is in March. We had a very quick drop and the price came back all together. So in this month, the price went down and up again. And as we can see, we did not close below. So obviously there seems to be a lot of buying pressure coming into this level. Now we're crashing down again. So yeah, and we are not that far away from the IPO price. I mean, of course, a little bit, but and then if we also look at the complete history, then we see that basically all this period, the price has been above the current level. And just this period, the price has been below the current level. As you can see, this is a very short time period here where the price has been below, and a relatively long period where it has, I mean, these are just simple things, but I think they help a lot already. And so what can we say? A big drop. So after a 76 or a 77% price drop, you always need to ask yourself, is this a buying opportunity? Never a selling opportunity, because you want to buy low and sell high. This is just the way it is. Obviously, this is very difficult to do, but still, this is what good investors are doing. And now let's check this out. If we zoom in a little bit on the weekly time frame, still we can see that this downward trend is still in place, you know. So you see there is always, we're always in a downtrend. So here also this level we have not broken this. So there's no market structure break actually, but after having a 70% drop, you can now get cute with the timing and so on, and just wait till you basically have a market structure break and then an uptrend again. But you are at such a good level right now, support level, that I think historically it's a good thing to buy it at a specific level, not based on a market structure break, and given that the fundamentals are right and that the company is overall solid, and this is just a temporary thing and we expect higher prices. Of course, we need to analyze this. This is just an assumption. So technical picture says confirmed downtrend, very hard crash, very quick crash, but at a support level and potentially interesting to buy. Okay, now let's check the following thing. Let's look at some fundamentals here. And now the question is, of course, what is the company doing? Now, if we go here to the Alibaba website, then we can see this thing looks a little bit like Amazon, but it is not exactly Amazon. We can see you have here a search bar where you can look for products. So this is basically like Amazon. It's a marketplace where you can buy and sell things. And here they have consumer electronics, looks a little bit similar like Amazon apparel, but they also have vehicle parts and a lot of different stuff. So also here categories, you see they have machinery. So this is obviously they're even selling agricultural machinery, and this is untypical of Amazon, for example. And what does it mean? It means obviously they're targeting businesses. So buyers and sellers are businesses focused. This is how it looks. And also the normal products, like, I don't know, some here new arrivals. Let's check out some shirts. Okay, as you can see, even these shirts, they don't sell it just one to a consumer. So they are selling obviously to businesses here with 100 pieces, 10,000 pieces and so on. So obviously it's focused on businesses here. Okay, and what can we say about Alibaba? It's probably, so first of all, I would say this. Alibaba is a Chinese company. So Chinese stock market has risks, in my opinion, because of the leadership, not so developed financial markets. You never know, do you own the shares or not, and so on. So there are a couple of things which are, let's say, fishy, or there's potential risk. But Alibaba is a blue chip name. It's one of the biggest companies there is. They have big network effects. They have a proven business model. This stuff works. And, it is kind of like Amazon or Google in that way. So it's, from that point of view, I mean, people are buying and selling this successfully in Alibaba. How do they make money? Yeah, obviously they will take a fee if there is a transaction happening on this marketplace. And also for the sellers, they want to advertise their products, right? So, and obviously Alibaba will take a little bit of rent from them, that the advertisers, the sellers, can place their products at this website. So these are a couple of ways. Of course, you can dig in much deeper. I'm sure they're doing 100 different things in addition, but this is at a first glance what it is. And from a business model perspective, it seems solid, seems established company, and I don't see why they should not make money with this, especially if they have proven that there is a business, that there is the network effect, and probably it's more or less like a monopoly, acting similar like Google, Amazon, and so on. Now, let's also look now at some fundamentals. So this is just a business model, just very briefly, just understand, okay, what are they even doing? How do they earn their money? This is just a very first step to understand what's going on. And this is already enough to get a first picture. Of course, if you want to dig deeper, you need to do this. But let's look now at some fundamentals. And this platform, this is not advertisement now, but this is now just what I use here from time to time. This is Koifin, this platform. You can make a free account there. It gives you some fundamentals about the company. So you just type in the ticker BABA and then you get this overview. Of course, at the website of the company, public equities, they need to publish information around their financials and so on, and disclose that to the public. And you can do the digging yourself, of course, and it's advisable to do so if you really want to focus in very specifically to the company. But here, for the first glance, I think it's enough if we just look at some aggregated numbers. And here, what can we say? Okay, so this is here obviously New York Stock Exchange. This is one first thing. And the question is, where do you want to buy it, if you want to buy it, because they're also trading on the Hong Kong Stock Exchange, and there is always some battle going on between the United States and China. And potentially, we know with the Russian war and so on, some financials, some stock markets can even close, some companies can get delisted, and Alibaba can potentially become delisted on a New York Stock Exchange. You never know what is going to happen. So maybe it's just a thought. What I think, it is better if you think that this company is worth buying, to buy it on the Hong Kong Stock Exchange, because there it's Chinese territory. They will not just delist the stock. Why would they delist their own stock? It does not make sense. So this is just one way how you can reduce risk when looking at these things. Now, okay, sector consumer discretionary, it's internet, direct marketing, retail. Okay, so here we see the market cap of 268 billion. And I don't know what Amazon has, but over a trillion easily. So it's probably a 4 or 5x. Is Amazon bigger than Alibaba? Okay, just to get some perspective on the size. So market cap means, of course, number of shares times the share price. And this will give you the market cap, the total valuation of the equity of Alibaba. And here we see, what else do we see? What is interesting here? So one thing that is interesting is, of course, the valuation, because if we look at the PE ratio, that gives you also here a graph. And if we look at this graph, then we see that historically the PE ratio has been trading, I don't know, the mean probably around 30 or 35, in some periods even around 60, and times with very relatively good valuation was here when the PE was maybe 70 or something like this. But even now it looks not too high. PE ratio means, of course, price versus earnings, or market. So it's the stock price divided by the earnings per share, or you can express that, of course, also as the total market capitalization divided by the total earnings. So, and the difference between is just an aggregated number and a per share number. It's nothing else. And now let's look at some other stuff as well. EV sales. So this is the enterprise value, market cap plus the total debt. So enterprise value means the amount you need to pay if you want to buy the whole company, basically. Enterprise value divided by the sales. This is just the revenue. What are they selling per year? And this number is less than 2 for the last 12 months. And this is interesting because, as you can see in this graph, the EV, enterprise value versus sales, was much, much higher. It was here 20 and now it's 1.8. So this is actually incredible. This means that if you want to buy the whole company, the enterprise value, you pay a low multiple compared to the sales that the business is generating. So you understand, it's just a relative thing. Of course, this alone does not mean anything, but still interesting. And then the enterprise value versus the EBITDA. So these are the earnings before interest, taxes, depreciation, amortization. It's also down at 9. And the price per book, it's basically the stock price versus the book value of the equity on the balance sheet is 1.7. So this is also down very. So all I can see here, of course, it's natural, because the stock price is what is happening here. The stock price is crashing very fast, 70%. And the question is, are really the fundamentals becoming much, much worse, like the technicals, like the price crash? And probably answer is no, because they have roughly stable sales. I would imagine we will look into that, and also the earnings. Of course, it can happen that it will slow down and then you get punished. But there are, I don't know, I cannot imagine that the fundamental picture looks as bad as the stock price. So obviously Alibaba got really punished because, of course, political risks, pressures from the Chinese leader, of course, who cracks down on Chinese tech companies, has, so all of these things contribute to increasing number of sellers in the stock. So it's not only about the company fundamentals, of course, these other factors like the capital flows always contribute to this. Now, what else? We see here that for the market cap of 270 billion, they have a total debt of 27 billion. So this is actually not very high. It's quite low actually. So they don't have a lot of debt and they have a lot of cash. They have 77 billion. So if we just calculate this, 77 divided by 268, it's basically 1/3 of the company, of the market cap is the cash. So this is actually quite good. So this looks stable. Now let's look, what can we see here as well? Let's look at some financials, some highlights. So if we look at the revenues, the quarterly revenues from 2020 till now, we see obviously here, okay, number is going up. So sales are going up, looks actually quite good. Of course, maybe they have a little bit of slowdown, but overall direction is good, looks healthy. And what else do we have here? So here also the net income looks also good. Then what else is here to see? Maybe an interesting thing would be the cash flow. So balance sheet, we said, okay, they have cash, they have low debt. Now, how about the cash flow? So we see here they have net income and it actually looks quite good. Positive numbers, somehow stable. And now we look at the operations. So what are they earning? So the cash from operations they're generating is also very positive, so this looks actually quite good. So this just means whatever they're doing in their main operations, this is the marketplace they're operating, they're earning money, and they're generating real cash. It's not just an income on the income statement, it's real cash from the operations. And now what are they doing with their cash? And here we see they do some investing. So they use the cash to do some investing, and the question is, what are they investing in? And we see here some numbers, some bigger numbers are up here. So this means capital expenditure. So this means they reinvest in the business. This is generally speaking a good thing. And we also have here some negative numbers, and negative means cash outflow. So this is an investment. If you do an investment as a company, you do a cash outflow. Investment in market and equity securities. So probably they will buy back some stock, and if the price is crashing right now, probably not a bad time to buy at a low valuation. This is not necessarily a bad move. This is probably quite smart. And then we look at the cash from financing. What do they have here? Cash from financing, we have here negative numbers recently. So this means a cash outflow, and obviously they are paying down their debt, which is also a healthy sign. So overall, we can conclude the balance sheet looked healthy, a lot of cash and not so much debt. The market cap compared to an Amazon is still like much smaller, and they're doing basically the same thing, more or less. The valuation is relatively good. We had a big price crash. Sales are relatively stable. Earnings are relatively stable. Sales are going still up. And we have the multiples of PE, enterprise value versus sales, price book, and so on, all look quite cheap historically. So fundamentally, it looks good. And we see here also that from their operations, this company is making money. The business model is working. They're producing cash through their main activities, which is their operations. And they reinvest in their business, which is a good sign. It's healthy. They're paying down debt, which is a good sign. And overall, we see that the free cash flow, this is an important number, is still positive here. So we see they produce, after all of those activities, at the end of the day, this company is producing a lot of free cash flow. And just from this quick analysis, of course, you can dig now much deeper what is happening here and so on and so on. But this already tells you the company is high quality, it's a blue chip. Yes, it's in China. This is maybe a bit a downside, has a little bit potential risk, but the fundamentals are good. The business model is working, they reinvest, it looks like they're doing a lot of things right, but they are still punished very much for probably political risk and some other things, And the question is, is the political risk really that high? Generally speaking, I would stay away from Chinese stocks, but in this case, it's really a high quality company. It's amazing company. The numbers look good, and you get this at a big discount right now. So from my perspective, really Alibaba looks promising, and why not take a starter position? This is what I'm thinking right now. And the question is always, how do you position size this? Because even if you now with a quick analysis can maybe deploy a starter position, invest a starter position, could be, but if you want to go heavily in that company and invest more, then of course you need to do much more analysis. But often doing a quick check, a quick analysis is often all I need to make a decision. And I will never invest, let's say, 10% of my portfolio in one single company. I have a different approach. For a position size for Alibaba right now would be maybe probably 0.1% of my overall portfolio. This would be a starter position, and then I increase it maybe to 0.5%, something like this. Then I would branch out, maybe look at Tencent or something else and include it as well. And then overall I have maybe a 1 to 3% or 5% position in Chinese tech stocks, but a couple of them, and the overall individual company exposure is much less than 1%. So this is how I reduce the risk, because something can always happen that will lead to you losing money. You never know. But overall, with an intelligent position sizing, risk management, and overall portfolio construction, I think this quick analysis already can tell you why not take a step at this, and this is what I do constantly. I try to figure out, okay, where's the opportunity in the market? Are some things really cheap but are high quality? So basically their price is well below their internal value, so I expect a higher price in the future, and there's the opportunity. Always when the picture does not look good, when the stock price is crashing but the company is still good, this is the time to buy, and this is how you should think, and not buy the stocks which are at the all-time high. This can work, of course, as well, depending on your approach, but this is at least how I do it. And I just create a pipeline of ideas, something like this. Then there are several other sectors where I see opportunity, and then I build a list. And then basically I always have something to invest in, something interesting, and you never need to go all in on one specific idea. And if you have a lot of ideas, you can always deploy a little bit capital, wait, be patient, have a long-term mindset, and at the end of the day it will pay off. So for Amazon to rally 50%, it's no problem. They can easily do it, and a 50% return on the cash that you deploy right now is of course something to behold. And yeah, this is just a quick analysis. Of course, you can do this much deeper, but I just wanted to show you how I do a quick analysis, quick check. Is it worth buying? Yes or no? Often the answer is no, because you see maybe the company has too much debt, the business is not really profitable or something like this. But here it looks different. And yeah, I hope you like this content. Please make sure you subscribe and like, and also comment. Please let me know what you think. What should I do in the next video? And also you can find a free gift in this video. You will find it somewhere in the video, and I put a link up there. Exclusive investing guide, 10 actionable steps how you can grow your capital with investing. So stay tuned for that and check it out. It's free. And yeah, I hope this is helpful to you, and until next time, see you.